Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So another day. I'd say the active was somewhat constructive. We're not having much power in the indices, but you're seeing individual stocks set up and trade. Some of them are just out of play, need to be avoided, and some, you got to pick your spots, pretty carefully. But if you are prepared, you can be rewarded. If you look right here at the chart of the S&P cash, just going to go through it really quick. We broke down from this wedge type pattern here. It did give you some type of trade from what was that, 21.44 all the way down below 21.18 to give you a low on that red dog reversal day, which was 21.14. Since then, we've rallied back up, and now if you kind of draw your line again, all right, we're still in now a bigger symmetrical triangle. But at least these triangles are giving you some plays, right? Here was this one that broke to the downside. That was your summer range, if you remember. Okay, and then this was a small one right before the Fed day that gave you a nice squeeze in at least 2 days. So, we're getting these micro moves that just happen to be 1 to 2 days or 2 to 3 days or not even. So we'll see at some point, does this change? At this point, it has not. So during earnings season, what you want to do is you want to pick your spots and you want to be very stock specific. So today, you had Yahoo open strong and Intel open weak, and I think both had a little bit of movement in the same direction, not like a counter trend move to that earnings report. So real quickly, you look at Yahoo. Yahoo, didn't do much. I still don't like this chart, but it does have a gap up, and I guess at this point earnings are out of the way. Maybe it can continue to the upside, but I would wait on that. Intel didn't rally whatsoever. Okay, but I actually look at it like now. Just remember I said in my note, see if it holds this 35 area, which it did. So now we'll see if this could hold for a little bit and then at some point give you a trade into that gap. Okay, because if it starts getting downside follow through, it's going to create more weakness, especially in the chips. Yesterday, in the names that we really trade, you had the Netflix numbers, right? Netflix numbers were real strong. The subs were strong. You had a decent day yesterday. Really, today was the day. You never know how many days it takes to digest a big earnings move, but what you know is your pivots. So for those people in the VTF, or read my note, you know that yesterday's high was your pivot to get long. You could have actually been long a little bit before that. So let me show you what I mean. So basically, here's Netflix. Okay, so coming into today, the pivot that I listed was right here. Why did I list this? This was yesterday's high. Anyone who was still short after earnings and said, I'm going to be short, this gap's going to get filled. There was a guy on TV yesterday giving a price target of 50 to 60. You know what? They might have had to make a decision to cover when it went through this 119.82. Okay, if they did so there, you know what? They took less of a loss and they didn't get hurt into this move. If they're deciding to roll it up for another time, then that's who they are. For guys who came in flat, okay, it started basically, went negative real quick, and you could have been a buyer here and made some nice money. Or you could have been a buyer at 119.25. That's where I was buying it. If I'll show you why here, because, you had a nice little pivot. Okay, this was your pivot. You have to probably even go to a 1 minute chart real quickly because you guys sometimes are like, how do you enter? Blah, 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 blah. Netflix, that was after the news. Here is your chart from today. Okay, here is the open. Okay, boom. Okay. Just want to give you a little, nuts and bolts. Nuts and bolts, X's and O's, nuts and bolts, X's and O's. I'm an idiot. Anyway, here you go. So here was your first quick move on the open. This was the yesterday's high, the pivot. Okay, so I wasn't in Netflix. It came up real quick. It started to hover in here, and the high of the morning was this 119, 25-ish. So that's where I bought it. Figure if it gets above this, it's going to at least squeeze to yesterday's high, and then there we'll reevaluate to see if we can get through the post-earnings high, and if it does, you can get another move. So this was, if you came in flat, had a quick move down, went green, hovered, buy number one, buy number two, and then you figure out what you want to do with the rest of the day. I think, we sold most of it somewhere around 121, and that post-earnings high after hours was 122. And now you go back to it. That's a good post-earnings move. You can't argue with that. Okay, and now we'll see if it's going to get another day or not. But again, decent trade, coming in flat with the right plan. Google, I came in with it long, probably a little bit too much because I got caught in that pull-in. I wasn't expecting a pull-in like it was yesterday after on a first day breakout. Here's what I mean, and here's your first day breakout, and now it held above it. So at this point, I do think it can continue. You had a nice little pivot buy in here 2 days ago, which was close to that 820, and then today it opened around 822 and hung in there pretty well. And now it does seem like it can continue. The earnings are until next Thursday. Tomorrow is Thursday, so a whole week it has to figure out if it wants to continue to run pre-earnings or not. If you have less on than here, that's fine. If you have less on than the highs, that's okay. I have small on. I actually sold into some strength. I got in towards the middle of the day to figure that I need to stay in some and trade around it because I've been so invested in this so long, and all it keeps doing is coming out with news and products. Now they're saying they're getting into web-based TV, et cetera, et cetera. So we'll see what happens here next. This is your pivot. I know I'll be buying here, so I said I might as well buy some a few dollars below so then I could add if it's going to continue. Amazon, you know what? It's kind of taking a few days off. So just to let you know what I did today, because you rarely get a time to buy Amazon in the whole. Okay, today I bought some 820 calls. Why did I buy 820 calls? Because earnings the next Thursday, and I figured if it's going to be good, if they're going to announce a split, which I don't know if they're going to do, or have a good results, it'll probably take out this 847. Okay, and you would think about a 40 to 50 point move above that. That would get you 880. So I figured down here, if they want to run it towards earnings, I have a little bit of a price in the hole, and then I could always add to it, if afterwards, or if it comes back into the 50-day because it's been a little weaker, I'll add a little bit more. But right here, at 820, 27 points off the highs, I figured it's a good time to nibble a little bit into Amazon. I did the same thing with Baba. Baba, we had a really good, earnings play last quarter, right here and then right there. We've also been trading it really well. We're trying to sound like Trump. We've been trading it beautifully. Well, anyway, here was your push. Here was your retest. Well, in here I bought the 97.5s, and then I think somewhere around here I sold the 105s, and now here we are at 104 with 2 days left. So I got out of my call spread, which if you've been on my note, you've been seeing a call spread in there all the way back from here. It worked out real well. And now what I did small, okay, I did two things, okay. First of all, November 2nd is earnings, so I bought November 4 105s, okay, because I figured, the Friday expiration for earnings on that day, so it's an earnings play. If it's going to go and be real, it's going to get above, this 110. That's what they do in earnings. If it's a powerful, great report, they get over pivot resistance and they give you a move. So I figured I'd buy some of the 105s here, since it's already $6 off the highs. And then I also, since I know King's Day, or I'm sorry, not King's Day, Singles Day is November 12th. I bought November 18th options for the 110s. So I have calls for earnings, and then I have calls that include earnings and Singles Day, just in case. But I'm only in half a tier because we're still pretty far away from those numbers. And at some point, if it trades above this, I might buy it for just the stock intraday. But for now, I'm in the options, and that's just small for now. Apple hasn't done a whole hell of a lot. 2 days down, I bought a little bit into the close. They just came out with an invitation for the MacBooks. It's still fine. This is an out-of-sequence trade. It's holding up here. It's come a long way. So, I'm in a little small. 2 days of relative weakness isn't great for Apple, but Apple likes to go when it wants to go. And it's been trading really well since. So we'll see what happens, in the day or so ahead. I've been going over the strength in oil and how the oil has held higher ever since it engulfed that day. They said they were going to cut production, and everyone's like, oh, well, they didn't really say they were going to cut it, so we got to short it. I'm like, but the action's saying it's strong. Anyway, here's your USO. This is when this downtrend was broken, when you cover shorts, had a nice move up, and then all of a sudden, boom, did 4 or 5 days above the 200-day, and now it seems as if it's trying to eclipse, these weekly highs to continue to the upside. XLE, in my note, we talked about 70-30, 70-30 to buy. Why was that the buy? Because that was clearing the pivot in the moving averages. Here's where it held higher, and now we'll figure out if there's more follow-through to take out this at some point. Again, remember, above the 200-day for 6-7 months is a bit more constructive, a lot more constructive than it was the past 2 years. Past 2 years, it's been below the 200-day, below, this support that, broke, came back up to it. So if you were a seller at 80, what was that, 80 almost 90 something, into this, 65s, they've been accumulating it, above the 200-day, which is just different. So maybe this gives you some alpha moving forward into the end of the year. We shall see. New issue land, not a lot going on. Twilio, I think, is pricing Thursday night. That's tomorrow night. Stock, we had a little bit of a pop, yesterday. Came in long, sold it real quick before it went red, and didn't revisit it. For some reason, I think people are still scared of the pricing. Here is some pretty big support. People are getting a little smart. They tried running it, so then maybe they could price it here, and they can't run it beforehand and mess with people. They're going to have to probably price it lower. It did spend a lot of time, at least a month between 40 and 44, so we'll see if they price it in that hole. Prior to the secondary, at least you had a breakout failure, boom, boom, which gave you clues to get out because it wasn't a good trend prior to that. One move right there, another move right there, and then that was your topping signal. Now we'll see if this dip is viable. ACIA still hasn't really found much traction. If you were playing for it for a bounce, first of all, here is when it broke price at 100, and now, if this were to break, I'm not 87, and you're trying to buy this dip here, you need to get out of the way, because next spot is 83, and then the gap. These things have come a long way. They change when they have secondary. Sometimes you have to monitor the action. This was great when it took this out. It was even better when it took that out. And then it had a nice post-earnings run. So now, priced it at 100. People are underwater. It tried to rally. It's been selling into a stronger tape, so just be a little careful if this were to break. I'm not saying to short it at 87. I'm just saying be careful if you're accumulating thinking that, it came in from 120 or 130. I could buy it here at 88. It also came from 30, so just take a little care. The other guys aren't even really doing much, like Coop, just still dribbling lower. When you have the big leaders, grinding down the laggards, or the newer issues are going to follow, and this still isn't showing you much. Here's your post, IPO low. NTNX, same kind of thing. People are trying to buy it, on the dip, and at this point it still hasn't given you a clean signal that it's done going down. If this were to break 2960 tomorrow, here's that spot. At some point maybe it'll take this out, but it hasn't done that yet. So keep being nimble here. Some of you guys caught the miners and the metals bounce. The lower level trade was right here. Basically, if you get out at the right time, you can get back in at lower levels. Here's when the intermediate trend line broke. Here was your double top retest. Here was when this consolidation broke to the downside, and then all of a sudden it played with the 200-day and cleared it yesterday, giving you follow through today. And at this point, if you're still in it, just be in less. My day one is usually your buy, day two is your add, day three is your sell, because usually day fours and fives don't happen. But anyway, we shall see. Here's your pivot into the gap if it wants to push into that. And then the 50-day has been resistance, and it still is a lot higher. So there's some room here if you want to stay, but I would say if you caught this 3-day trade, congratulations, you're a surgeon. And that's really it. Tomorrow you have Microsoft. Really next week's the week when all of our stocks report. You have Amazon next week. You have Google next week. We have Apple next week. I'm not sure if we have Facebook next week, but we might. Then after that you have BABA, which is not for another week. So, the rest of this week, you do have a lot of names. eBay's today after the close. I didn't see it. American Express was after the close. But, that kind of stuff doesn't dictate the tape as much, or at least the action around our stuff that we trade. So anyway, with all that said, there's been some nice specific action. I think Netflix was a great focus from the note and from people on the VTF today. If you made money there, congrats. We've seen that set up before, post-earnings, and hopefully we'll have some more plays like that in the coming sessions ahead. Have a great day. You should definitely go on my webinar if you haven't signed up already. It's going to start at 6 o'clock with Adam Mesh, and should be interesting and educational. So hopefully you're signed up, and I will see you there. Have a good one.